just doing an update now. Post the data, and as I'm sure most or all of you who are traders out there will know, we've had a big miss in the headline number. However, well, it was a big miss, 245,000. Expectations were all over the place, to be honest. There was a big, a big spread in as there is not in most months, but this month is a particular wide range and variance in expectations for the headline number. There was on the different calendars, for instance, you can see Forex Factory had it at 480,000. Reuters consensus was about 495,000. Action Economics, one of the key economic companies we follow, had it all the way up at 540,000. Reviewed it, pulled it down from 570,000 earlier in the week. And over on Finviz, another key site, it was up at 650,000. Enoch, good afternoon to you. Yes, I'm glad you're all back now. This is more like it. Getting some more questions on Facebook. We just didn't connect for the main event. So anyway, let's get rid of my ugly mug and let's get the charts up. So the dollar immediately sort of, because of the nature of the headline, the nature of everybody's attracted to the headline. It was a big miss at 245,000, but wages were better than expected. They were up 0.3% and 3.3% on an annualized basis. And the trade balance was okay. There was talk as well. I said there was a big spread in expectations for the headline numbers. There was some negative talk. I think TD Securities were the closest at 280,000 of the actual main analysts we look at. But some banks had them negative. I think it was AMB Ambro had a negative call, or about just over 100,000 call. And some other, I think it was Oxford Economics had a negative call as well. So it's a significant miss, definitely a significant miss at 240,000. Again, it's obviously backward looking. It was the data was taken a few weeks ago, but equities have sort of relatively held up. I say the dollar initially, it's as usual. There was a big. Here's the euro dollar on the 15-minute. So we had this spike up initially for the euro to 121.70. We'd been as high as 121.75 this morning. Not this morning, or earlier, just before, not this morning, it was still this morning, before the data came out. And then we started to move down. We've spiked into the pivot point down here at 121.39, and we continue to unwind. But generally, the dollar was a bit weaker, but it's sort of come back a wee bit now in this, where are we? We're sort of 45 minutes after the data came out. So once it's been absorbed a wee bit, dollars come back a wee bit, but again, dollars at lows are at these, these very significant low levels, and the downward pressure on the dollar continues, and there's no real let up from the data that's come out. As I say, the unemployment was positive; it was better than expected. It slipped another tick to 6. Actually, where is it? I've lost my calendar now. It was down again to where it was 6.8, wasn't it? Let's just find it here. Yeah, 6.7%. So it's down again from 6.9% last time. It was 6.8%. It was anticipated to be. So that was quite good. The U6 unemployment, the wider measure, that's gone down, but by only one tick again, but still up at 12%, but it's still significantly lower than it was, obviously. So overall negative. But it's not really going to change much. Obviously, the main drivers of the market at the moment are expectations of some sort of fiscal deal from the United States. 908 billion is the last thing that's on the table from this bipartisan group of Democrats and Republicans. The Democratic hierarchy, Pelosi and Schumer, have sort of talked positively about it. Remember, they were talking about $3 billion package only a few it seems like a few weeks ago. The president at the time, pre-election, obviously was talking about this sort of number, which the Democrats weren't having anything of it at the time. But that looks like that's going to move forward. Biden continues to appoint members of the cabinet. Obviously, the major one has been Janet Yellen, or propose, I should say, not appoint. It needs the Senate approval. Janet Yellen leading the Treasury, a very diverse and experienced team under Janet Yellen within the Treasury, and then the guy that he's heading up, I've forgotten his name now. I did make a note of it, but a young 42-year-old guy taking over the position that Larry Kudlow holds at the moment as the chair of the chief economic advisor. Very much skewed to the green economy. The chap whose name escapes me at the moment. He worked for Obama, and Biden obviously knows him in the previous administration. He then went off to BlackRock to run some of their funds and try to push BlackRock down the more greener investment nature, the more liberal of the left wing of the Democratic Party still see this as not a great appointment, but it's very much a centrist appointment. So it's being viewed quite positively within the markets as well, this chap's appointment. So some questions coming in here now. So let's have a look as we come to just before 15 minutes to the US Open for the final trading day of the week. Can you please about gold? Will it come down to 1760? Says Vodnala. Well, it depends on your time frame, doesn't it? It could quite easily come down to 1760. Well, it's not going to do that today, I wouldn't have thought. But it's all about time frames with trading, ladies and gentlemen. Today, actually, let's go back to the daily time frame. So the daily time frame, we've certainly been down to 1760, haven't we, Vonella? We were here at 1774, and we got as low as 1763 this final day of November. So we had this big move down for November, following this huge candle on the 9th of November. Remember with candle patterns, guys, the size of the body of the candle is very important. So you can see that was a huge engulfing candle we had here. Massive sell-off on the 9th of November. We went from over 1950, 1975, all the way down to 1865 that day. And here we are, another $100 below that. So sideways for a few days, and we sold off into the end of November. Big sell-off under the 200-day moving average this time last week. So last Friday, we closed and broke under the 200-day moving average, very significant, quite significantly as well, because it sits there at 1800. We closed at 1788, and then we went all the way down to 1765 into November. We've now recovered for 5 days in a row, quite significantly. So Tuesday's big bounce back up took us back over the 200-day moving average, and that's our key support here at 1800. So Vodnala, the 1765 or 1760 level looks a bit of a step too far at the moment. However, let's just have a so the weekly time frame still looks relatively weak, but again, that has that key support there at that 1760. So your weekly time frame has support. The 50 period moving average on the weekly time frame sits down there at that 1760. So it's not out of the question, but again, on the higher time frames, it could easily be attached to a gain. But in the immediate, certainly today, it's not going to go. I wouldn't expect it to get all the way back down there, but you never say never, because we're now back today in this intraday stuff. We're in our 1, 2, 3, 4th day up. We're at the 20-day moving average. So if anything, the bias is to the upside, Vodnala. As we're moving up. Intraday is a bit quieter. We've gone sideways most of the day, but interestingly, it's bid up quite significantly in the post NFP hour that we've had so far. So we're up at the top of the range today. So we're pushing back over the top of the Bollinger Band and the R1. So if this is going to close positive today, we want to be over this testing 1850 again for gold. To the upside. So I hope that's answered your question, Vodnala. If you're more interested in tighter timeframes, let me know, my friend. So Carrie, hello from the Philippines. Hope you're safe and the weather isn't too bad. The typhoons have calmed down. I understand you've had some really bad weather over the last few weeks in the Philippines. Hello, Emily, and hello to Kyra Mandap, my friend, as well. So guys, anything you want to have a look at, any either equities, commodities, forex pairs, please let me know. It's been a very interesting couple of weeks. Obviously, December is typically quite a strong for equity markets, traditionally going back a long time, but the last few years has been a bit less strong. So the USA 500, the USA 100, and the USA 30 have all hit new all-time highs in the last week or so. This is the most important of them all. This is the USA 500, and this is the daily time frame. So again, this went long here on this crossing strategy here on the 4th of November, and it's continued to gain momentum. We went new all-time highs, and we've into the end of November, and it's continued up for December. One caveat really is the run to December. See, this December, we're into the 4th day now. The candles are getting narrower and smaller, so we're perhaps running out of steam. The energy, the momentum may be running out, and we can see that as the RSI stalls and flattens at 67. Our MACD, can you see the MACD here? See the MACD signal line? We're flattening out. The histograms are at it or just above it, so we're sort of cooling potentially. But the big support levels to this going down, remember things go down much more quickly than they go up. We've got our key 20-day moving average there at 3,600. And then below that is the big support, which is the bottom of the Bollinger Band, the 50-day moving average, which sits around the 3,500 level. So those two big round numbers, 3,600 and 3,500 are big support areas on the daily time frame for the equity markets, the most important equity markets of all, the S&P 500. And as usual, the spam has started. So, Azari, there we go, right on cue. Please, can you tell us about the S&P today's momentum? Well, that's the higher. So the daily time frame still remains bid. These are our support and resistance levels for the intraday up here on this top right-hand corner. You can see here, hopefully. So let's come down to today. So far today, we've been very much sideways, waiting for the jobs news to come out. So again, emphasis. If I zoom this in a bit, you can see how this flattening I talked about on the daily time frame is more emphasized here on the 1 hour time frame. See how we flattened out here. See this yesterday on the MACD, flat RSI here at 54. So it's really neither going down or going up. 54, it's just above, the midpoint. Still relatively positive, and you can see there, if I zoom that up again, you can see the clear resistance we have today. So top of the Bollinger Band and R1 today for the USA 500, the S&P is 3682. So that's the level you want to get over if we're going to move up. And Zari, and our support initially is the bottom of the Bollinger Band, the 1 hour Bollinger Band, which is at 3674. And then much stronger support is the daily pivot point at 3669. So 3670, call it, around for the sake of 1 point, which is also where the 50 hour is. So big support there. We've been over that all day today. We were under it yesterday. So that's a key support area. So that breaches later today. We then got the bottom of the Bollinger Band at 3665. And then S1 sits at yesterday's spike low when we got to 3655. So some key, quite tight, narrow ranges on the S&P today, Ansari. So best of luck, my friend. Let's have a cup of tea. Wung is asking about euro pair on the 4 hour time frame. Which trend are we looking at? Well, Wung, the trend remains set. If you're talking about a trend, the trend is on the up, the 4 hour. So this is the I should say, let's go to the time frame above, which is the daily. You can see a very, very strong run into the end of November for euro dollar, and then an even stronger start to December. So has it got overbought? Well, yes, it has. The RSI technically is saying we're up here at 75, so we're into the overbought area. What we haven't seen is any intervention by the central bank in Europe, the ECB. There's been even a bigger move on the Dolly Swiss, and again, the Swiss National Bank normally get quite active and intervene, and there's been no clear intervention there as the Swiss franc is trading at five-year high. So anyway, it's the euro we're talking about on the 4 hour. So a very strong week so far. You would expect some sort of profit taking going into the weekend, some risk being taken off the table. Obviously, the euro has the issue about the EU-UK trade deal happening or not happening. But as far as the 4 hour trend is concerned, that remains very well bid. So we got support here at that big round number at 121, which is where S1 sits today and where the 20 period 4 hour moving average sits as well. So big fat support there, 121 for euro dollar on the 4 hour time frame. But so far today, we've ran out of steam, or we're topped. Pivot point was posted late last night. This morning, we've tested the R1 level. So 121.77 is our top today, Wong. And we got, again, another one with a relatively tight range today because of NFP. 121.38. So 121.38 breaches on the 4-hour candles. Only a couple left, obviously, isn't there? Let me check. Is that one? That's the one that's just started. Yeah, so that one's just started. The last one was negative, so we got 2 more of those candles before we close for the week. So yeah, that's a key area to be watching. That looks like that's going to slide sideways into the end of the week. Stochastics have been overbought, but they've been overbought for most of the week, to be honest. RSI has been in its overbought zone, so you could expect a bit more profit taking potentially going in to the weekend as people take risk off the table for the 2-day weekend. As we obviously, people also have sights for the end of the year now as we start. Obviously we just started the new month, but the end of the year comes into focus as well. So the 4-hour continues, here on this longer. You see how it's broken out nice, and that just remains, just stay long basically. From a momentum trade, the RSI is flattened out. Sorry, the MACD is flattened out a wee bit, but it's still positive. Stochastics typically volatile, but overbought RSI as well. So you might see some consolidation here, but you could have said that all week, couldn't you? Overbought, but rising signal line. Now the signal line's flattened out. If you're long, want to take some profit off the table before the weekend comes in, but that looks fairly still strong, and it has been for a long time, hasn't it? Moving up euro dollar on the 4-hour one. I hope that's answered your question. Who was next? Godwin. I want to trade, but how can I go about? Godwin, come to our website, hotforex.com, and go to our education tab. I can't show you it, unfortunately, because it's only showing my application on this website. But come to our website, go on to our education tab and watch our videos. Download our ebook, and come to our webinars and come to these live events all the time. We do 2 or 3 of these a week. We do webinars 3 times a week, scheduled at 11 o'clock GMT, so come to those as well. We're here to help you, my friend, okay? Find yourself a mentor of anybody that you know locally, or come to the partnerships, come to copy some other traders. Look at our HF copy platform as well, so have a look at that. Oh, dear, I'm getting spammed as usual. These David, go away, please. Oh, God, 1, 2, 3, 4. How do I get rid of these spam guys? Anybody know how to get rid of these spam experts? No, I don't want to show. I just want to get rid of him. David, it's a very strange picture of David Smith, but there we go. Any more? Sorry, I think that's not a problem. David, just keep sending me. Send me your website. He says, right, it's hotforex.com. So it's HOTFOREX.com. Godwin. Okay. Neri John, hello, my friend. Are you talking to me or are you talking to Brr? I don't know. I'm very well. It's the weekend approaches here, so I'm very well, thank you, my friend. Anything you guys want to talk about? I'm fed up with getting spammed. I want to get rid of this guy. Doesn't matter, he's still here. Okay, so that was euro on the 4-hour, continues to go up. So Dolly Yen, another one that's continuing to move down. This is the 1-hour time frame. We've got the daily time frame. So the trend is down again, sort of chopping about. Both the yen is relatively weak as well. They're both weakening, both these key currencies, but dollar yen continues to air around under the 104 area. We've tried to get back into it today, but we just can't break and close over 104. We might do as we come into the opening of the US session. Let's just have a look. They're about to go live. The US equity markets, in particular, bond markets, obviously already been running. But 104 is our top there. That's a nice little rising wedge there, rising triangle, but it just can't break and hold over there. Dollar yen on that 1-hour time frame. Neri is asking about euro yen. We just had a look at the euro yen. Euro dollar. Neri, somebody was asking about the 4-hour time frame. I think it was Anzari was asking about the 4-hour time frame. I was saying it's had a this is the 4-hour we're just looking at, and it's continued to move up, but it's sort of consolidating now at these highs. So it's today's pivot point 121.38 is the support, and the resistance R1 is the top, which you can't break over at 121.77. So quite a key channel here on the 4-hour trade. You see it's, and it'll see it exaggerated on the 1-hour time frame. So we may break these areas, but we haven't. Into yesterday's close and all of yesterday, waiting for the NFP number. We moved up initially, and then we've moved down. We moved up and then down in the immediate aftermath of the NFP, and then we've moved back up again. So we've got support. You can see here on the 1-hour time frame there, 121.38, and the resistance there at 121.77 for the top. So that's the euro dollar going forward for the rest of the day. And as I say, depending how you're trading this, if you're an end of day trader, you're still long. There's no reason to be getting out of that. We've had a very strong week. A very strong start of December, I should say. We went down at the end of November on Monday, and then Tuesday, Wednesday, Thursday, Friday, we continue to rally. As you can see at the moment, the candles are getting smaller. So Tuesdays was big, Wednesdays wasn't quite as big, Thursdays was smaller than Wednesdays and much smaller than Tuesdays, and Fridays is still positive at the moment. Obviously, we've got all of Friday to go still. We've still got 8 hours to go before the day's close. So we see how that finishes, but it's still long. There's no reason to get out of that. Again, with the 4-hour, you'd still be long. You may want to take some profit off the table because you bagged it. But again, it's all, I can't tell you what to do. You decide how you trade and where you do it. But again, it's biased to the upside, euro still. And people are talking about obviously now 122, as we can't get over 120.21.75 at the moment. So interestingly, YouTube's on here as well. So Bay Lion, good morning to you, sir. I guess you're in, you're saying good morning. I guess you're in Latin America somewhere, or the Caribbean, I don't know, or wherever you are. Mary John, gracias to you as well, my friend. No problem. So there we go, euro to the upside. Let's just run through the others. We had a look at Dolly Yen was down, not as badly as we were yesterday, 103.66. For a new low here for the Dolly Yen, and we just can't get over that 104. Sterling continues to be bid, and we're back over 135. Let's have a look here. So we bust over 135 post NFP. Market is pricing in. They're expecting a deal. There was this comment earlier from Reuters. The last thing I saw, obviously, I'm not seeing my news feed at the moment, from Reuters saying that a deal was imminent. Reuters contacts were saying earlier in the day we'd had the French saying that they were going to potentially veto a deal if they're not happy with it, and they've actually said it out loud and publicly. Part of their negotiation stance on both sides, but this is very, very typical. This is the 11th, the 59th minute, the 57th second of the 59th minute of the 11th hour to get a deal at midnight syndrome. But here we are. We're into the first week of December, and this is supposed to go live at the end of December. So it's very, very tight to get anything of any sort of significance in place. Lots of confusion on both sides of the English Channel. Lots of British businesses very, very confused and going to be compressed into this 3-week panic potentially if anything comes. There was talk earlier in the week of extending the 31st of December. The UK government won't going to have any of that, I don't suppose, but it's all down to a silly debate over fisheries. The French and the Europeans want to fish more in what is now regarded as UK waters for fish that the UK don't consume anyway. So that's another argument. But it's how much of that fish and how much access is given to both sides. And again, the irony is, the British fishing industry used to employ thousands and thousands of people. It's now less than 12,000 people employed in the UK fishing industry. And 2 big retailers in the UK have announced this week potential job cuts, which would more than double that 12,000 jobs. 25,000 jobs are under threat from the closure of Debenhams and the Arcadia retail chains in the UK as well. So massive impact there. And that's just from 2 organizations, let alone this one whole business that's employing these guys in the fish and ladies in the fishing industry. But anyway, I'll get off the point a bit there, don't I? But anyway, sterling remains bid on this anticipation of this deal and the weaker dollar. Sterling's up against the weaker yen as well, and come back against the euro as well. So sterling's up. The two antipodean currencies, the Aussie and the Kiwi, have given up a bit today, but we're still holding it. As far as the Aussie's concerned, we're still holding this break of 74 or .74 that we broke on late on Wednesday, and we held all of Thursday and went as high as 74.50. We dipped down again in the immediate pre-NFP, but we've come back again this hour, so we're back up at 74.32 and looking quite positive. MACD's interesting, looks like it's maybe wanting to move down, but we're back over the 1 hour. See where that finishes today, sort of this 1 hour 20 period moving average. Kiwi, on the other hand, again, another one that's holding over the key 70 level at these record highs. Aussie and Kiwi at multi-year highs. Dollar CAD, on the other hand, is down here, produced a new 28 month low earlier today, 128, and we're moving down again because the Canadian data this today was better than expected, came in at 65,000 new Canadian jobs when the expectation was only for about 20,000. So last month was very good, and this month was also better than expected from the Canadian side of things. Lots of fiscal stimulus being approved in Canada as well. So Canadian dollar also getting a lift from the movement in the oil price as well. So dollar CAD down here under S1 and moving lower. Closely correlated the oil price all the way up over $46 earlier. Today we're coming back down now, actually moving down quite significantly, but still owed a very significant $45 a barrel. Expectations were that the OPEC and the OPEC Plus agreement disappointed. Really, they were actually talking about they've actually talked about increasing production by 500,000 barrels per day when there was talk of perhaps not an increase in production and a cut in production, or at least capping what they've done, but they've feel confident enough to try and raise the production levels. And they're doing it in a tapering way as well. They're not going to do it all at once. So as countries come back on stream, Libya in particular, and obviously Iraq, the situation with Iran is very much in the melting pot now with there's the new democratic president and president-elect in the United States. That has a different feel now. Iranian oil production, but it's obviously sanctions still in place there. So that has all of that is obviously adding to the supply side, but obviously the OPEC felt demand should be sufficient going into 21. Certainly third quarter, fourth quarter next year, as the vaccine gets rolled out and things start getting back to normal in the next 6 months or so, demand might start picking up. They're anticipating a massive pent-up demand potentially. So oil, still relatively high, but come down most of today from this 46.50 high we had. 45.75 at the moment. And Bitcoin, I haven't mentioned Bitcoin at all, but Bitcoin still holding at highs, consolidating at highs here, 19,000 new all-time highs this week for November, and then again this week for December, 19,100 at the moment. So again, strong support at 18,000. The 20-day now sits at 17,700. So again, another one that's just trending higher, but again, always expect the unexpected with crypto trades. And last week we had this $3,000 move within a day or two. Last Wednesday, last Thursday, we lost $3,000. Went from 19,000 plus down to 16,000 in the space of a couple of days, shaking perhaps a lot of these late buyers out. But then we've consolidated again and continue to move up. But again, a bit like the equity market, sort of compressing at these highs at the beginning of December as we look to the year end. So there we go. So any more questions, guys? I don't know when I started this session now, but any more questions? Have I lost you? There's this as if we've lost people again. It comes in gluts. So where was it? Last question was 16:32, which was 10 minutes ago. So I guess most of you have been and gone. So I'm going to wrap it up. Let me finish with Bitcoin and the dollar in. That's not Bitcoin, the equity markets. The equity markets have moved up. So we've opened markets positively. Let me just check how we opened up. Yeah, so that dollar bounce has quickly faded, as if they've just written there on Forex Street. Equities, yeah, opened relatively positively to the upside. So with 668, as I say, we want to break that R1 level there for the USA 500 to the upside. So just trading, getting underway in the last 10 minutes in North America. And dollar index, let's have a look at this. Yeah, another leg. This is the hour candle. So from a bit of a recovery back to the pivot point today at 90.75, we soon gave up that, and now we're pushing new lows. So we're just, at the moment, we're at 90.47, and we're pushing or presenting new lows for the day as the American market gets underway for the day. So pressure remains on the United States dollar, and that's the dollar index continuing to unwind, and a big down arrow, sorry, a big down candle for this current hour. So if there's no more questions, guys, I'm going to call it a day. I'll see you all again next week. Do join us at these sessions. Andrew and I do these between us 2 or 3 times a week, or certainly 2 times a week, typically on Facebook and YouTube. We're live 3 times a week with our webinars on Tuesdays, Wednesdays, and Thursdays. So join us there for those scheduled webinars. Until then, have a safe weekend. Stay safe, everyone, and we'll see you all again next week. Take care, everyone. All the best. Bye-bye.